Welcome back to this first edition at 2014's Financial Issues. It's great to be here. Happy New Year to everyone. And let's hope that this is the year, 2014, when the Lord returns. Wouldn't that be nice? But we will live our lives as if it will be today, but we will plan as if it might be 100 years from now. That's what we want to do. That's what we want to continue to do. And we will, in fact, continue to do that. Anyway, we are going to get to some of the economic news that is out. But more importantly, I want to get to your phone numbers or your phone calls. I'll give you the phone number. 866-300-9298. 866-300-9298 if you want to queue your call up. What are you thinking about 2014? I'd love to hear your comments on what you believe is in store for us from a financial economic perspective. I also would like to ask you if you feel that from an economic standpoint, 2013 has been a good year, and I'd like to know why you think that or why you don't think that. So if you want to weigh in with those comments, we'd love to hear from you. 866-300-9298. That'll be fun, and we're, of course, going to take your financial questions. By the way, as we finish the year, we look at gold down about 28% on the year. That is the worst year gold has had since 1980. Silver not faring quite as bad, but nevertheless down as well. But gold, the worst year since 1980. There was a report out this morning of someone, they didn't give the name of a prominent trader, is all we got, who made $100 million on a $10 million bet that gold was going to go down. So there were many people that didn't feel comfortable with gold this year. I was one of them, and by the way, it wasn't me that made that bet. Even if I'd had been able to do something like that, even in one of my institutional accounts, I wouldn't have done it. But nevertheless, we're not looking for a great year for gold this year. So we're going to have to wait and see what the end of next week brings. I'm interested to see. Right now, all the Dow futures right now in negative territory. It was in negative territory before the job numbers came out this morning. It went down a little bit further in negative territory as a result of the job numbers. Don't forget, there are a lot of people that are going to be taking profit off the table. A lot of traders, institutional traders, hedge fund managers, investors that are going to be taking profit and off the table. They are beginning to reallocate or rebalance their portfolios. So there's going to be a lot of that. I wonder if they're going to be rebalancing into bonds at all. Bonds right now, the 10-year sitting just above 3%. And some are talking about a 4% 10-year bond by the end of this year. I think that'll be interesting. I'm thinking about 3.5% for the end of the year. As we head towards the end of the year in bonds, I think 2015 could be a little bit worse, but good for 10-year treasuries, bad for the economy, unless we see some inflation really starting to head in a big way. So that's what we're looking at right now in the bond markets. The jobless claims, they were down. Those filing for first-time unemployment benefits this morning were down about 2,000 at 339. That was the last jobs report for the year of 2013, and it was at 339. So that was perceived as bad news. It is bad news for the markets, I guess, although it's interesting how the markets are using that, or at least the headlines are using that as an excuse of bad news, when we've had job numbers for prolonged periods of time far worse than that. I think the big issue is what's going to happen with quantitative easing. If the markets are going to be driven by quantitative easing, as they were in 2013, which I believe they may be, as they were in 2013. Now, I do believe there's going to be a correction this year, but nevertheless, quantitative easing isn't going anywhere in 2014. And I wouldn't be surprised if we see bond rates, 10-year note interest continue to go up, and we start to see some inflation come in. I wouldn't be surprised if we actually see an increase from 75 to 95 or to $100 billion a month. Remember, we were at 85 billion a month. That is changing now to 75 billion as we took 10 billion. We slowed the printing presses down a hair, and we are now at a different value. 866-300-9298 if you want to weigh in. 866-300-9298. You know, it's interesting. Saturday's a big day for me. I'm an Philadelphia Eagles football fan. I know. Listen, I was born and raised here. I've even thought over the years of changing. I just can't do it. It's not even possible. But anyway, Saturday playoff game. But the interesting part, the Eagles sell out. They were the only playoff team that did sell out. They sold out in a few hours. I happened to be down at the stadium area when they went on sale. It was crazy down there. But anyway, we see that there is some concern in the NFL this morning over the fact that 3 of the playoff games have not sold out yet. So if you follow me on Twitter at Financial Issues or my Facebook page, you saw that article I sent out. I said, look, is the fear for the NFL, or is the fear that they didn't sell out for the economy headed into 2014? Okay, it's a little thing. We're talking about 3 playoff games in football. What's that got to do with the economy? Who cares about football as it relates to the economy? Here's the thing, folks. Does anybody out there really believe that it's got nothing to do with the economy in this sense? That it involves, to buy playoff tickets involves discretionary income. There's no ifs, ands, or buts about it. That's where it's coming from. It's coming from people's discretionary income. And does it say something about the mindset of the American people when it comes to spending in the economy headed into 2014? I believe it does. Now, you can all call in and accuse me of really a stretch here. That's fine. But I'm not saying this is one of the leading economic indicators. It's not what I'm saying. All I'm saying is that we've got to consider this. We've got to consider it. And I think one of the problems with all the economic forecast of 2013, 2012, 2011, and 2010 was that none of the forecasters were taking into account the issue that were of the mental attitude of the investor, of the spender, of the consumer. Nobody's taking that into consideration. And I think we absolutely have to take that into consideration. And I don't think we're doing that enough. So anyway, I'm just, I'm not trying to hang my hat on the 2014 economy based on 3 NFL playoff games. I mean, that would be ridiculous, right? The point is that even, it's the little things. When you combine all the little things that are going on to the economy, it's very difficult for somebody to take a look at that. Now, if someone said to me, and this happens often, particularly when I speak at leadership conferences for some reason, maybe because I bring it up as a part of what I talk about when I speak about leadership in America. But one of the things that I talk about often at my investment conferences as well is I would consider myself a behavioral economist. So I look at behavior. Now, I look primarily at behavior in the industrial sector, in the manufacturing sector, in the business sectors, yes. But you cannot discount the most important sector, and that's the consumer sector. So as someone that does a lot of analytical work in and around behavioral issues, this is one of those factors that you have to think about. One of the things that are little things. How about how much trash restaurants are producing or putting out? Believe it or not, there are people that study that and look at that. It's a part of a behavioral kind of mentality or attitude in and around what people are spending. The more trash, the better it is for the economy. I know it sounds silly, but when you look at playoff games for football, is not a lot different than a nice or a fancy restaurant in some of the major cities. They are, I look this year. So I've got 4 grandchildren this Christmas, and I have 2 coming. So I'll have 6 grandchildren next Christmas. And grandchildren are extremely expensive. We never spent the kind of money. We didn't have it, but we didn't spend that kind of money on our kids. We spent it on the grandkids. It's got to stop, by the way. But anyway, when we look at that, one of the things that has been nice is that this year over the holidays, and I'm going to go to the holidays starting at about December 23rd through yesterday. We had a lot of people in this house over that period of time, family, kids, grandkids, and others. But we spent we spent very little money going out. We didn't go out. We didn't do a lot of takeout. We did a lot of stuff inside, which is my favorite way of eating. So it was very interesting. I wonder if that had something to do with the times. I think it did. I think it certainly did. But anyway, I'd like to hear your opinion about that. By the way, stock futures lower again on the job numbers. Great, but in China data being horrible, data coming out of China. The Eurozone PMI is picking up. We're going to get PMI numbers here in about a half an hour. And we're also going to get PMI numbers, not PMI numbers, but construction numbers at, I think, 10 o'clock Eastern time. So we'll look at those. They're important numbers, and we'll watch those. It's very interesting. Also on my Twitter page, my Facebook, at Financial Issues. Twitter is at Financial Issues. My Facebook page is Financial Issues. Francois Hollande, the president in France, concedes that the taxing on his citizens may be a little heavy. And the funny part about it is it's annoying the left, the people. Now, all of these left-wing progressives, socialists in France that put this guy in office, did they really think that he was going to keep all the promises that he made to those that are involved in participating in the generosity, for lack of better, there is some better, but I won't say it, of the nanny state of France, is all saying, well, wait a minute, we don't want to be taxed more too. How exactly would you, left-wing progressive socialist in France, how exactly would you like the government to keep all its promises to take care of you from cradle to grave so that you can retire at age 55 and live a long life? How would you expect them to take care of you in a country that has one of the lowest productivity rates in the world? How are you going to do that again without the taxes? I mean, really? Are they that foolish? Brings me to America. Obamacare, the taxes that we are dealing with in Obamacare. You heard me go through the list of those taxes. By the way, just for your information, I thought I had it in front of me. I don't, because I wanted to print it out, and I probably never did. Of those taxes, if you don't have health insurance this year, not a big deal. Your fine's going to be 1% of your income, or $95, whichever is more, which is going to be 1% of your income. Next year, it goes to 2% of your income. The following year, it goes to 2.5% in order to try to push you and drive you into signing up for health care. You're listening to American Family Radio, Financial Issues. I'm Dan Celia. We're going to get right to the phones. 866-300-9298. We've got one line open. We'll be right back.